Listen to me, guys. Capital of a company is divided into numerous parts because there is going to be numerous shareholders, and that is why capital is divided into numerous parts. Each part has equal monetary denomination, and each of such part is called a share. The monetary denomination of each part is kept very low so that every small investor can also become one of the shareholders of a very large company. Have you understood what I said? I'm asking guys. Have you understood what I
Yes,
explained about share capital?
Yes, sir.
yes, sir.
So capital of a company is divided into numerous parts where each part has equal monetary denomination and each of such part is called a share. This is the reason why capital of a company is called share capital. I hope guys you all have got this. For example, a company has capital of rupees 10 crores, which is divided into 1 crore parts of rupees 10 each. So its capital can be presented as number of shares multiplied with value per share. So here number of shares are 1 crores, each is of rupees 10. So total capital of the company is rupees 10 crores. Each of these 1 crore parts is a share of the company. Have you understood guys or not? Sarthak, have you got this? I'm asking all guys, have you understood this?
Yes, sir.
Yes, sir. Yes, sir.
Yes, sir.
Yes. Guys, when we will see issue of shares chapter, we will talk about this in detail there. Now, guys, next about share capital is shares are of two types with equity shares and preference shares. And so the capital is that is equity share capital and preference share capital. We will talk about equity share capital and preference share capital in detail in business studies or in commerce. It means a company can have two different types of capital. One is equity share capital and one is preference share capital. The sum total of these two capitals, look at here, guys. The sum total of these two capitals is presented corresponding to share capital in these columns in the balance sheet. For example, a company has capital of rupees 50 lakhs. Now you want to see which kind of capital it is. Is it equity share capital only or preference share capital only or both? For that you need to refer list or note number 1. Am I clear? I'm asking all guys, have you got this?
Yes,
Yes,
sir.
sir. Yes, sir. Yes, sir.
So guys, note down this much. Please change this, guys. Manish, Manveer, Mishika.
Yes, sir. Yes, sir. Yes.
The second item, guys, that we had under shareholders' funds is reserves and surplus. So these are undistributed profits. So reserves and surplus is sum total of undistributed profits. The profits may be revenue profits earned from carrying the business and or capital profits which are earned through capital activities. Surplus is credit balance in profit and loss account. You know this, guys. This we have seen in partnership also. Surplus is credit balance in profit and loss account. However, debit balance of profit and loss account is also included under reserves and surplus. I hope guys you all are listening me carefully instead of just noting it down. There may be debit balance also in P&L account and profit and loss account. That is also part of reserves and surplus, though that is not undistributed profits, but that is undistributed loss. Yet we include that in reserves and surplus with negative sign because that is a loss.
सर
Yes.
सर सरप्लस तो मतलब एक्स्ट्रा पैसा बचना होता है ना.
Surplus
like
means the
extra profit
profits.
होता है.
Surplus means the profits that you have earned, out of which you have given dividend, you have transferred some amount to reserve, still you have some profit left. That is called surplus.
ये मुझे सेकंड पॉइंट समझ नहीं आ रहा. डेबिट बैलेंस एंड प्रॉफिट एंड लॉस इज आल्सो included under reserves and surplus
You will
वाला.
understand it. I'm giving an example, right?
Okay.
Now, guys, we know that all the reserves have always credit balance. Reserves can never have debit balance. Out of these reserves are revenue reserves, and these two are capital reserves. And this is undistributed losses, right? Now, guys, in the notes to accounts of reserves and surplus, that is in the list number 2, which is for reserves and surplus, we will show this item as a negative item, like this. So the total of this list would be 58, 70, 80, 85 minus 24 is 61,000. So in balance sheet, guys, here we will show 61,000. I hope, Tanmay, now you understood this. I'm asking all guys, including Tanmay, have you understood this, guys, or not?
Yes,
Yes,
sir.
See, all these reserves always have credit balance. P&L account can have debit balance, can have credit balance. When it has credit balance, it is called surplus. But when it has debit balance, it is called undistributed loss. Are you there, Tanmay?
yes sir.
Have you understood this?
सर बोला मैं. Yes sir.
Okay. Do not write this, guys. This I'm explaining only to make you understand what surplus is. Let's say a company has earned net profits of rupees 1 lakh in the year 2022-23. Out of this, it decided to pay dividend of rupees 20,000 to its shareholders. It also decided to transfer to general reserve rupees 5,000, to investment fluctuation reserve rupees 6,000, to debenture redemption reserve rupees 4,000, and to dividend equalization reserve rupees 5,000. So total profits appropriated by this company out of this 1 lakh is 25, 30, and 40,000. Then also it has balance of 60,000 in its P&L account, which is credit balance in profit and loss account, that is surplus. So I hope guys you all have understood what surplus is. Yes or no?
Yes, sir.
Yes sir. Yes sir. Yes.
And I hope you also have understood what are revenue reserves. Revenue reserves are made out of net profits. Capital reserves are not made out of net profits. No. You will learn about both these reserves in issue of shares chapter. Capital reserve and securities premium reserve. Okay, so guys, We have seen the two items which fall under shareholders' funds. The third item is share warrants. Listen to me carefully, guys. When a company issues shares to investors, right? The investors become shareholders of that company. So when there is public offer, like some months back we had offer of Life Insurance Corporation. Before that we had of Zomato. Before that we had of one company which makes women apparels and ornaments. Misho, I think, I do not remember that exactly. So,
IPO ना,
right. So, guys,
इनिशियल पब्लिक ऑफर
yeah,
वही
right.
उसका था, नायका का था.
Nika, very right. It was of Nika, right. So, guys, when a company issues shares to its shareholders, for which shareholders have to pay to the company, and this is how they become one of the owners of the company, the share certificate is issued by the company to shareholders. That certificate is not in physical form, but it is in digital form, and that is called dematerialized form of shares. So, if you want to purchase shares of a company, you first have to open a demat account with any depository, including banks. All the commercial banks have they give this facility. And in your account, in your demat account, not bank account, in your demat account, you have share certificate in digital form, where you can see that how many shares you have been allotted by the company where you applied for shares. Correct, guys, or not? Have you understood what I said? I'm asking all guys, we do not have much time. 6 minutes are left for this session. Have you
Yes,
understood what
sir.
I just explained about share warrants?
Yes, sir.
Yes, sir.
Not about
Yes, sir.
not about share warrants, but about share certificates. Right. Now, in case after some time you want to sell those shares, you cannot sell those shares to a person of your choice. That is not possible at all. You have to sell it by going into share market, which is also known as capital market or stock market, like Bombay Stock Exchange and National Stock Exchange. You do not know who is the buyer, you simply sell it. Between you and the buyer, there is the exchange, there is the market. It means, guys, you can never transfer or sell your shares to a person of your choice. Correct? I hope you all have understood. Now, suppose a father has purchased shares of a company long back, and now, today, on the day of marriage of his daughter, he wants to gift those shares to his daughter. The price of the share in these years has boosted like anything. So he wants to gift shares which he has to his daughter on on her marriage. He cannot do this if he has share certificate. Share warrants, on the other hand, is a substitute of share certificate. Once I purchase shares of a company, I get share certificate. With that certificate, which is in digital form, I have to apply to the company that instead of certificate, I want warrant. The company may issue you warrant. When you have warrant, it would be always in physical form, not in digital form. On that certificate, which is share warrant, your name would not be mentioned. Your name is always mentioned on share certificate, never on share warrant. The reason is that By mere delivery of that certificate to anyone, you can sell or transfer your shares to others. If you have warrant, if you have certificate, you cannot do this. Have you understood, guys, or not? What I explained now?
सर ये डिबेंचर्स है क्या?
नहीं, debentures अलग होते हैं. They are different thing.
सर डिबेंचर्स भी तो ये होते हैं, लाइक सर्टिफिकेट होता है एक, बॉन्ड्स और डिबेंचर्स भी.
It is totally different, Tanmay. Please, we will see this
ओके
later
सर,
in debentures chapter.
इसका भी चैप्टर क्या?
So share warrants are substitutes of share certificates which can be issued to a shareholder by the issuing or by the company on request of the shareholder. So here share certificate is converted into a physical certificate known as share warrant. On share warrants, name of the shareholder is not mentioned so that he could transfer or sell them to a person of his choice by simply delivering the warrants. Now, guys, here's suppose I have been issued share warrants of Tata Motors. Now, neither my name is there with Tata Motors nor on the share warrants my name is mentioned. Tata Motors knows that I, that is Amit, can transfer these warrants to anyone, anytime, according to his convenience. And therefore, Tata Motors will not send me dividend in my bank account at all because Tata Motors does not know who is the owner at a time when dividend is declared. So, in case of share warrant, the drawback is that every time the company declares dividend, the holder of share warrant has to go to the company and has to claim his dividend. I hope you all have understood this, guys. So, guys, you have to note down everything here. I've explained you everything about share warrants. Note down this one, guys, all fully. I repeat, a company needs to classify its liabilities into current and non-current only while preparing its balance sheet. Because in balance sheet it has to present non-current liabilities and current liabilities separately, right? Okay. Now, what are non-current liabilities? The liabilities which are going to be due or which are to be repaid or discharged after 1 year from the date of balance sheet are non-current liabilities. So suppose today I am making balance sheet of my company as at 31st March 2023. Means on 31st March 2023 I am preparing balance sheet of my company. I will classify my liabilities as non-current if they are to be repaid or discharged after 31st March 2024. And if liabilities are to be repaid or discharged up to 31st March 2024, then they all would be my current liabilities. Have you understood what I explained, guys? I'm asking.
Yes, sir.
So under non-current liability is the first item that we have to present in our balance sheet is long-term borrowings. Yes, guys, are you done with this?
Yes, sir.